Good morning. It is December 26th, 2023. It's just after 11 a.m. on the East Coast. This is Boxing Day. If you live in the UK or Canada, or even the little island of Malta, it's a holiday in the UK Commonwealth world. US, not so much, but it's all good. It's a pretty quiet market day. Gold, 2070 an ounce, just consolidating very nicely. Maybe not quite as quiet as I would like, but it's fine. Markets, 48.15 on the S&P, also just sort of gyrating aimlessly here at year end. Expect this final week to be pretty quiet, although Friday could have some year-end rebalancing flows in markets. One theme to look for in this final week is to see if we get the tax loss bounce in names, let's say biotech or junior mining stocks that were really oversold in the last couple of months due to tax loss selling, to see if they get a relief rally here at year end. It's usually a pretty seasonally bullish time of year for junior miners, precious metal sector as well. So I'm making a few, let's call it 3 videos here at the end of the year, talking about my themes for 2024. This is the first in that series. The aim of these videos is to give some ideas for the viewer to take and then do more research on, do more work on, and use in any way that they see fit. So I'm just giving you some ideas, not going into great depth on these ideas. If you want more depth, if you want actual market timing ideas, well, you need to subscribe to my premium service. I've got about a dozen spots opened up in that. So if you'd like to reach out and learn more about that, send me an email to ceotechnician@gmail.com. Again, this is Robson at CEO Technician on X, at Goldfinger on CEO.ca. And if you find value in this video, please hit the like and subscribe button to my YouTube channel at Goldfinger Capital. So again, these are just some 2024 themes that I'm looking at, that I'm exploring more deeply, and ideas for you to think about. But first, let's look into biggest lessons from 2023. And so I have 4 up. I'm sure there's more. We could go on forever with lessons, but these are the 4 that really stood out to me. And I'm going to skip to the second one. Fade the end of year consensus. Remember, at the end of 2022, everybody was bearish on tech. Many people were bearish on everything. And they were horribly wrong. Okay. You couldn't be more wrong to be bearish on tech in 2023. And that was the consensus view at the end of 2022. So we want to be wary of consensus views as we enter 2024. So we're thinking about, what are some consensus trades right now? Okay. Never underestimate how effectively Wall Street can construct a bullish narrative. They did a masterful job in 2023, being able to twist and turn everything into a bullish narrative. And that was one of the reasons why the markets did so well in 2023. And they're always managing to price in more and more rate cuts, and earlier rate cuts, sort of forcing the Fed's hand. It's very interesting, this dynamic that the Fed is being led around by its nose by Wall Street. And the last one, so I'll get into the last one in a separate video. I want to discuss this first one right now. So overbought can get much more overbought, just as oversold can get much more oversold. So there's 2 things that I see amateur technicians, amateur chartists talk about a lot, and they act as if it's truth and it has to be. The first one is when the RSI gets above 70, you should sell. It's too overbought. It's going to come down. It's going to fall. The stock's going to fall if the RSI is above 70. Also, every gap has to fill. So if there's a gap in the chart, if there's a gap in the GDX chart or the coin chart or the NVIDIA chart, well, it's got to fill. You don't want to buy it if there's an open gap down underneath. It's going to fill. And those are both misconceptions, and they can be very costly misconceptions. So let's explore overbought can get much more overbought. Great example from the junior mining sector, Hercules Silver, big on the venture. So we know, most of you watching this video probably know a little bit about the Hercules Silver story, but we know just from the chart that something changed in a big way in early October, and it went vertical, okay? And we can see up here, the relative strength index, the daily RSI 14, got above 80 very quickly. So the armchair overbought technicians would be screaming, it's overbought, it's got to drop. Okay, so this is October 20th. Let's see where October 27th. Oh, look, it went up even more. It was at 63 cents on the 20th. It went to 88 cents on the 27th. And look, the RSI stayed about the same, 76. Let's go even further. Let's go to November. November 10th, 115, and the RSI is still above 70, 73. So notice how the price continued to trend higher as the relative strength index stayed above 70. So I really want you to understand this point here. An overbought RSI, an RSI above 70, can be a very bullish thing. And the strongest bull market stocks the price trends higher in overbought territory. The strongest, most bullish stocks will stay overbought for extended periods of time. Now let's go to where Hercules Silver is today. Okay, it's at 144. So notice what has happened here. The first chart I pulled up was from October 20th. The price was 63 cents. So since then, the share price has more than doubled. And look, it didn't have a crash at any point during this time period between October and where we're at today. The biggest pullback it had was from about 160 to 110. Okay, that was about 30%. That was the biggest pullback it has had during this entire period of time. And today, it's within a stone's throw of its all-time high at 162. Okay, so it's trading at 144 as of Friday's close. And look at the relative strength index. It has cooled off. And actually, this chart is a textbook example of what a bull market chart looks like. Okay, you have trending and overbought for a month and a half as price goes up 5x basically. Then it has a correction, very healthy, 30%, standard stuff, completely standard. And notice where the relative strength index sort of bottomed out at, right at 50, the median line. And then it resumed its uptrend and consolidating. And I'm not going to go into this chart anymore because the point was to talk about overbought, can stay overbought. But this has the makings of a cup and handle pattern forming here on the daily. So that's another potentially bullish chart pattern that's forming here in Hercules Silver. But overbought can get more overbought and more overbought, and they can stay overbought. So we don't want to just blindly follow some misconception rule that RSI above 70 is overbought and it means a correction is coming very soon. No. And in fact, Hercules proved it many times by getting above 80. Okay. The RSI got above 80 on the daily time frame. So again, Hercules has actually traded textbook, really. And as of right now, it is forming another potentially bullish pattern in a cup and handle, but that is beyond the scope of this video, so I'm going to leave it at that. NVIDIA was another example of a stock that got overbought over here in end of May. See how the RSI went up to 90? But look at what happened. It kept going higher. So the RSI managed to cool off even as the price kept going up. All right, so you need to use the RSI carefully and not blindly as just it's overbought. The stock has to drop. Okay. Coin right now is another example of a very bullish stock, extremely bullish stock. And look at the RSI. This looks very much like Hercules Silver in October, November. So the stock has gone from 70 to 175, more than a double for a multi-billion dollar market cap company. RSI is still at 80, and it's been trending in overbought territory for over a month. An example of how oversold can get more oversold: gold mining, Newmont. I mean, look at Newmont's performance earlier in the year. This downtrend it was in from early April to the end of May. I mean, basically, save for a few updates, a few sporadic updates, this was basically straight down from 50 to 39 in a straight line. And look, yeah, it did bounce. Like once it got really oversold, it did bounce a bit. But then look, another downtrend lower, got oversold again, bounced, downtrend lower. And, you know, this is another example of a bear market chart because it continued to make lower highs. So this is a lower high, 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 this is a lower high. And finally, in November, this, decline here on heavy volume was the capitulation, the final capitulation move in Newmont. So the downtrend started above $50 a share in early April. It bottomed at $33 in November. And finally, this climactic capitulation put in a very important bottom. I think that bottom there, the November 2023 bottom, could prove to be a major low for many years. Climactic bottom. And then finally, the way that we know the trend has changed is it started making a higher high and a higher low. So we'll see. We'll see what 2024 brings for Newmont and the rest of the gold mining sector. But the early signs are that a turn is at hand. And even this heavily hated mega cap gold producer looks to have finally put in a bottom. So I continue. Themes for 2024. So those are some lessons from 2023. I'll expand upon these in the next video. But let's get on to themes for 2024. Continued M&A in the gold mining sector. That's number one, front and center in my themes for 2024. Next video, I'll expand upon precious metals and miners and sort of some thoughts I have on how to play that sector in 2024. Then I'll have another video getting into biotech, medical psychedelics, and energy. But we're going to talk about continued M&A in the gold mining sector in this video. But first, some black swans, some things that I could see going wrong in 2024. These are always very hard to think of because we're so trained to, recency bias. And, the trend in inflation is down. Politics seems pretty normal, quiet in the US, but things could change in a big way in 2024. And probably the biggest black swan, because right now the consensus is bullish on stocks. The consensus is that inflation is, beaten. The Fed has won. If this consensus gets even more overwhelmingly one-sided, I would start to become very concerned that we could be in for a rebound in inflation. Now, this chart is from October, so we're probably a little further along in this falling inflation trend. maybe inflation is going to sort of bottom out in Q1 of 2024. So maybe February, maybe March, maybe April, but early 2024, we could see a very similar bottoming in the inflation trend, the lower inflation trend, as we did in 1976. And then from late 76 to late 79 was probably the biggest rise in inflation in US history, at least that I can recall. Basically, CPI inflation went from 5% to over 15%. That's a big deal. Now, this time, I don't think we're going to 15%, but what if it goes from 2.5% back to 4%? That would still be a big problem for the Fed and be a big problem for markets. So right now, there's a level of complacency that's building that inflation is beaten. We're back to 2%. It can only go lower. The Fed is still too tight, so they're going to continue to press down on inflation. And while a lot of that is true, already just in the last couple of weeks since the last Fed meeting, where they paused and hinted that they were done, we've seen a lot of easing of financial conditions through markets. Okay, the market's pricing in 5 to 6 rate cuts already in 2024. So the Fed hasn't even done one yet, and the market's already pulled forward a lot of easing, right? So between now and let's say March, when the Fed might do its first rate cut, there could be even that much more easing, which might actually start to bottom out inflation expectations and turn them higher. Again, this is a bit tricky, and I'm not betting on it right now, but this is something to think about as 2024 evolves. And it'd be something that I would be concerned about if the level of complacency rose even further than it is today. Now, the US election doesn't go as planned. That black swan, I mean, I don't even know if it's a black swan. It depends upon how it doesn't go as planned, because I think the consensus is already that the election in the US is going to be a shit show. We just don't know how it's going to be a shit show, right? And so this one requires expanding upon a bit more. So I'm not going to do that in this video, but that is definitely one of my black swans for 2024. So let's get into the actual main primary purpose of this video, and that is the M&A trend in the gold mining sector, and two M&A picks that I have for 2024. So I think we can establish that we're seeing an M&A trend in the gold mining sector that is gaining momentum. I have listed 5 notable M&A deals that occurred in 2023, the biggest one of which was Newmont acquiring Newcrest in a nearly $20 billion deal. We also had a nearly $5 billion deal. We had a $1 billion B2 acquired Sabina, which was not a producer, but basically a feasibility permitting stage project for $1 billion. So a very, very high grade multi-million ounce gold, deposit in the far north of Canada. They paid $1 billion US for that asset. We saw Calibre acquired Marathon Gold. So this is also these are feasibility stage assets. So these two are producers, big ticket ones. Obviously, you can see the price tag, and these are companies that have assets that have resources, multi-million ounces each of them, but they're either at the production ramp up stage, Marathon Gold, or they're at the feasibility construction stage, like Sabina, or Osino. I think was just starting, getting into the feasibility stage and permitting, right? So they were getting to that stage of, are we going to build it? How much is it going to cost to build it? We need to get the construction financing, and that's when they got taken out by Dundee for 170 million US for an African gold project. But there's a trend here. There's clearly a trend, and there's more deals than just this. I just went for the highest dollar ones that I could think of. But the trend is there. And if you notice the trend, it's going down the food chain. So we started with the big ticket acquiring of Newcrest to make by far the largest gold mining company in the world in Newmont, and now we're having the mid tiers and even juniors. I think you can call all of these mid tiers, but they're acquiring juniors, right? Um, and so I think we're going to see more of that M&A in the mid tier junior space. And two of my best ideas for M&A targets in the gold mining sector in 2024 are IAMGOLD, IAG on the NYSE, and Rupert Resources, RUP on the TSX. We're going to get into these a little bit, but I also want to invite you to let me know in the comments section to this video what your favorite M&A ideas are in the gold mining sector. They could be billion-dollar companies, or they could be $50 million companies. Let's not talk about sub $50 million companies, because that's really in the micro cap junior space, much more speculative. But I'd be interested to hear your ideas for M&A, especially in the mid-tier junior mining sector. So IAMGOLD, IAG. Let's flip this around a little bit. So IAMGOLD is a mid-tier producer. Market cap is currently about 1.3 billion US. Company has a significant amount of cash. They have about 500 million in cash. And a couple of interesting things here, just looking at some of the valuation metrics, they're trading at less than 1x sales. They're trading at 0.57 times book value, right? And based upon earnings expected over the next 12 months, they're trading at less than a 10 PE. So if these valuation metrics are valid, if they're real, the stock is pretty attractive. Okay, it's an attractive potential target for a larger company. And one of the things that I've noticed with IAG in the last few months is it seems like they are sort of setting the table, tying up some loose ends to be acquired. Just look at this, November 14th. They're buying the remaining shares of Euro Resources. So this is a smaller company traded in Europe, but they're getting 100% control of that. Then they acquired Vanstar earlier this month. Vanstar had 20% interest, fully carried interest in the Nelligan project, and so they acquired 100% of Vanstar, and now they have 100% of Nelligan, which is a multi-million ounce gold deposit with an average grade of over a gram per ton, tier 1 jurisdiction, tier 1 deposit, I think, and now they have 100% of it. And then this announcement just last week, it seems to me that they are setting the stage to be acquired. They're getting 100% control of key assets that they want as part of the deal, that the assets that an acquirer would want. And if I just look at the location of their deposits, their mines, their projects, they're mainly focused on Ontario and Quebec. And you can see that Cote is their biggest new mine that will be ramping up in early 2024. So ramping up to production of nearly 500,000 ounces per year in early 2024. And this is a long life, very large gold deposit with a life of mine all-in sustaining cost of less than $1,000 per ounce. So this is absolutely a tier 1 asset that they have at Cote Lake. And the Nelligan deposit is also located nearby in this area of Canada. So putting it all together, this could be very attractive as an acquisition target for somebody like a Barrick Gold, or even, like an Agnico. Okay, it could definitely be attractive and create some economies of scale there in Eastern Canada. So IAMGOLD, I would say, is my top one, just because the valuation is quite attractive. The body language of the company is like they are putting the pieces together, sort of dotting the I's, crossing the T's to be an acquisition target in 2024. But this really does hinge on Cote Lake and how well the initial ramp up of production happens there in Canada at Cote Lake. So this would be the sort of thing where I would be looking at this to be acquired maybe starting in mid 2024. And notice that they have Nelligan in this list of project pipeline. And Nelligan is absolutely a very attractive asset that they now have 100% of once they close this deal for Vanstar. So I think just looking at the press release here, does it have a date of the? Okay, here we go. Expected to close in the first quarter. Yeah. So I would expect them to get that tied up in the first quarter, to have the ramp up of production at Cote Lake in the first quarter. And then I think things will get very interesting, probably starting in Q2 of 2024 for IAMGOLD. So how do you play it? Well, like, what's a realistic price that an acquirer, could pay for this? I mean, if it's 1.3 billion today, you could definitely be thinking about a 40%, maybe even a 50% premium. So that would put it close to 2 billion. I do not own it at this exact moment. I don't own it today. And it has traded up to the upper end of its recent multi-month range just here in the last week and a half, right? So I wouldn't recommend chasing it, but this is the sort of thing I feel very comfortable buying it under $2.50 a share on the NYSE, especially down around 230 or 235 area. I feel very comfortable buying it, knowing that it is an attractive takeout target. And, if Cote Lake ramps up very nicely, this could easily be worth $4 a share in a good gold mining sector environment. I don't think that would be a stretch. But yeah, I think that if you're looking for what the takeout price could be, it'd be probably somewhere between $3.50 and $4 a share is pretty reasonable. Now, obviously, I mean, if gold is going bonkers, above 2,100 an ounce, who knows? I mean, maybe it could even go out at $5. But, I would be conservative, and I'd be thinking more about a $4 a share price tag for IAG. And again, I don't own it right now, but I may very well own it in the near future. The second one is Rupert Resources, RUP, US $600 million market cap, roughly. It's traded in Canada on the TSX. The symbol is RUP. And you can see that, Rupert was once nearly a $7 a share stock. In fact, I think if we go out even further, it might have been more than that. Let's see. No, about nearly $7 a share was the peak in 2022. It's been in a downtrend ever since. Well, a lot of that downtrend, some of it has to do with the fact that gold mining sector peaked in March 2022 when the gold price topped out after the Russian invasion of Ukraine. That's one factor. Another factor is the Lassonde Curve. So Rupert has been advancing an asset with a resource on it, and sort of in that lackluster, quiet period in the mining life cycle when you have a resource, you have a deposit that's been drilled out to some scale, and now you're in sort of the feasibility and permitting stage. And you obviously have to get construction financing at some point, right? And so the market starts to lose interest, sell you off, and that's what's happened with Rupert in the last 18 months. Stock basically cut in half from its high, but I think Rupert is a very attractive asset for a major. It's definitely a tier one asset. It's in Finland, the central Lapland gold belt of Finland. It's more than 4 million ounces, mostly measured and indicated categories. The average grade is over 2 grams per ton, 2.18 grams per ton. So you have an open pittable deposit, over 2 grams per ton average grade, over 4 million ounces of gold. 96% of the resources are in the indicated category. And the company is being valued at basically $29 per ounce in the ground. Okay, so that's not expensive for a tier one deposit. Okay, and their deck is very good. I suggest going through this deck, and I really like this slide that shows how new discoveries can evolve, like how big they can get. So, assume that after 15 years, all the ounces that are going to be found have been found, and that's not even always the case, but let's assume that's the case. Well, after year 2 or year 3, you've only found about half of what you will eventually find. So if Rupert's at, let's say, 4.25 million ounces, this chart would indicate they're going to be more than 8 million ounces when it's all said and done. So this is very likely a very, very large world-class gold deposit that they have in Finland. It is called Ikkari, and this is the resource statement. The grades are very, very impressive. The cutoff grade for the underground is 0.9 grams per ton. The cutoff grade for the open pit is 0.4 grams per ton. There's a lot to go through. I'm not going to do it all in this video, but it's a very good corporate presentation about the best I've ever seen. And then this slide comparing to Great Bear, which I think is a great comparison because Great Bear, Kinross put out a resource for Great Bear, and it's right around 5 million ounces total in all categories. And Rupert has 4.25 million ounces in all categories. So the comparable size, obviously Rupert's a little lower grade than Great Bear, which is about 2.6, 2.7 grams per ton in the indicated category. So it's a little different, but not that different that we can't use it as a reasonable comparison. And actually even look at this. With Rupert, 96% of their gold ounces are in the indicated category. With Great Bear, only 54%. So that would actually mean that Rupert might be worth more because those are higher probability ounces than what Great Bear has. I don't know. And also look at the meters drilled to get to this resource, over 400,000 meters. With Rupert, only 112,000 meters. So there you can compare and contrast these two. I would say this deposit stacks up very well with Great Bear. And Great Bear was a $1.8 billion takeout in early 2022, right? So you're less than half the valuation for a very comparable asset. Some people say Canada's better than Finland. Red Lake is the best place you could possibly be as a gold mining company. Okay, maybe. And that's why there's a discount, I guess. But I think there's room for that gap in the discount between 600 million and 1.8 billion to be bridged. I think Rupert is probably worth a little more than it's being valued at today. Okay. And again, I'm not going to go through all this deck, but it's a great presentation. It is really one of the very best. And what are the catalysts? So if they're in this this lull in the Lassonde Curve. Nobody cares about feasibility and permitting. Well, catalysts are completion of pre-feasibility study in 2024. So that will be a very big catalyst. What those numbers look like. And then the final EIA report submission, so the environmental permitting submission. I would expect that Rupert is acquired sometime between the submission of the EIA report and the receipt of the environmental permit in 2025. So this is not a takeout that is imminent, I don't think, but it could happen at some point in 2024. And then you have the catalyst. And this is just, honestly, this is why the stock has just kind of been treading water, is these kinds of catalysts are not that exciting to most investors. You still need to get permits, you still need to get the construction financing. Well, a bigger company will have no problem to get the construction financing. And once the permits are a virtual certainty, then it's de-risked enough for a major to come in and just take this asset, because it is absolutely a tier one asset. It checks all the boxes that you would want in a tier one asset. 5 million ounces, potential annual production of 500,000 ounces, and the grade makes it in the lowest quartile cost in the world for any gold mine. And Finland is a NATO country, European country, and very good mining laws. And already this area of Finland has existing mines, including owned by Kinross and Agnico. And then here's the NPV table. So just interesting, like, what is it worth at a $2,000 gold price at a 10% rate, 10% discount rate? Because all the gold mining companies use 5%. Let's use 10%. Let's be way more conservative. 1.5 billion US. 1.5 billion US. So that's more than double its current valuation. Obviously, there's going to be some more dilution. They have to get construction financing, yada, yada, yada. So, still, this could be nearly a double from today's level. So basically, it could go right back to nearly $7 a share. And then that's where I would be looking, sort of an acquirer. I mean, obviously, the earlier the acquirer comes in, the lower the price they might be able to pay. Like if they came in today, they might be able to get it for $550. If they wait, they might have to pay $650 or $7. And that's just the time value of money. And the more risk is still left in the project, the lower the price, the less risk, the higher the price they're going to have to pay. And from a technical analysis standpoint, just look at this trend line. This is a major long-term downtrend line. It's been touched several times in 2023. Even recently, it looked like it was breaking above it. It didn't. So watch this trend line and watch this 50-week moving average around $4 a share. That's a big long-term breakout level. So if Rupert gets above $4 a share, from a technical standpoint, it's all systems go, and it would have significantly more upside ahead. This is also just like a V bottom, a capitulation bottom, like we saw in the Newmont chart in early November. The Rupert chart obviously looks very similar, as it is also a constituent of a lot of the same gold mining exchange traded funds that Newmont and all the other ones are part of. But yeah, those are my two M&A targets in the gold mining sector in 2024. IAMGOLD and Rupert, both tier one assets in tier one jurisdictions. Thanks for watching this video. Merry Christmas, Happy New Year, Happy Holidays. And again, if you'd like to get on my mailing list or learn more about a premium service, send me an email, ceotechnician@gmail.com. Thanks a lot for your time, and have a powerful trading week.